Good morning, everybody. It's a great honor and pleasure to be here in Singapore and to participate in this Singapore Summit. As we all know, this first session, we really want to set the scene for the rest of the conference in terms of exploring some of the major economic and geopolitical issues that are basically besetting the world. I don't have to repeat them, as Chairman Koh Kwang Ping has really set the scene extremely well with his speech. We have a very distinguished panel this morning to discuss the various issues in more detail. And I think what we really need to get a feel for is, with this rising tension around the world, what is the impact on Asia? What is the impact on the Asian economies? And importantly, for businesses like ourselves, what do we do about it? What is the impact on ourselves? How do we maneuver in this very, very sort of changing scene? Every day we wake up and start looking at the news or the tweets, and then we got to adjust our programs accordingly. I think a real serious issue is, what is the impact of all this on Asia's economies, and in my mind, the impact on the future and our potential growth? Would that have an impact that is really going to have something that we have a serious issue to deal with? So let me start with, frankly, the biggest elephant in the room, US-China relations, starting with trade tensions. This is obviously the beginnings of all the things that we're seeing today. Let me turn to you first, John. I think from your perspective, you're contacting a lot of clients across the world every day. So how has this US-China trade dispute been affecting business confidence and investor confidence around the globe, and in particular in the Asian region?
Okay, thank you for the question. I appreciate the opportunity to be here. It's a big question, and it's a hard question to get your arms around, because I think there's been a significant change. If you think about where we came out post the financial crisis, we've had a long run of very modest risk premium in the market for what I'll call geopolitical risk. So really, we've been in an extended period where there hasn't been much attention paid to geopolitical risk in the way securities or other assets in the financial markets trade, or the way corporations allocate capital or think about their businesses over time. And that's materially changed, I'd say, in the last, let's say, year plus minus. And I think the recognition of that geopolitical risk is starting to really impact the way markets are trading. So if you take institutions and corporations as two big constituencies, apropos your question, I would say on the institution side, there's no question people are more cautious and more defensive, and we see it in our flows. So equity volumes in the United States market are down about 10% if you just measure average daily traded volume of equities in the United States markets, which are the deepest markets, down about 10%. Chinese volumes down about 30%. And any stock that's a multinational stock that has a significant presence in China, of which there are many, underperforming versus those that don't have that presence. So you can see people starting to rotate away. So volumes lower, new issue volumes, which is an expression of risk appetite, materially lower. 2018 was a big year in IPO volumes. 2019 is down significantly. So there's been $50 billion less IPO activity in the markets globally. And H-share IPO issuance, which would be the expression of international demand for, let's say, Chinese equities, down 70% year to date. So there's a significant risk-off mentality in terms of buying Chinese equities, particularly new issue equities. And there's been a significant rotation from growth into defensive, from cyclical to defensive, and that persists. So now I'd say institutions are kind of waiting and watching monetary policy. So really the two big factors are US-China, as you ask, and monetary policy, and that's what's driving markets. And we think there is really now all eyes on the Fed and the ECB and the other central banks to really propel asset prices further from here. And if you don't get reasonable outcomes in monetary policy versus what expectations are, the asset prices are probably at risk of coming down. And if you shift to corporations, similar theme, also more defensive, more cautious. CEO confidence materially lower by any measure from 2018, where it was leading into the fourth quarter 2018, CEO confidence was at a really high level. It's come down significantly. There's real weakness across some of the corporate earnings that you're starting to see. We just saw FedEx announce. FedEx is a pretty good bellwether of global trade and global flows. And I think that the weakness in capital spend that we're starting to see bears watching. The manufacturing sector clearly much weaker, consumer hanging in there. But if we continue to see weakness in capital spend, that'll have That'll have a real negative flow through. M&A volumes down 10%, which is another expression of CEO confidence. Keep it in balance, still reasonable activity, but M&A volumes down, which again, is an expression of how people are feeling about playing offense. So there's no question the sentiment has shifted to be more cautious.
Okay. Thank you for that, John. Pardon me for just probing in a very, sort of innocent question, if I may. In the midst of all this uncertainty, shouldn't interest rates be going up and not look at, really as a hiatus going down? What is your outlook for interest?
I think you have the central banks watching very carefully growth in the economy, and fundamentally weakness in growth both in the United States versus where it was, and then China, which are the two largest contributors to global growth. And then if you look across the European economies, exacerbated by some of the activities around Brexit and otherwise, you see a deceleration in growth. So if you're in a central bank seat and you're looking at that deceleration and you see a lack of fiscal policy response, you do feel a little bit on an island, like you have to measure your response accordingly to kind of deal with what's going on in the world. And I think that's what you're seeing. I also would say most central bankers, I think, feel that if there's going to be a downturn, or there's going to be even worse than a downturn, some kind of a renewed crisis, you want to move now. You don't want to leave all your arsenal for later. And so I think that's also probably baked into some of the thinking that's going on in central banks right now.
Okay, I won't push you further and start explaining why the Fed is doing what it's doing. But Dylan, let me move on to you now. One of the things that all of us now beginning to talk about around the world is this issue of decoupling, this issue of bifurcation. Really, that is again sort of the big elephant in the room. What do you think about that issue, and how is it playing out in Asia? And how is it affecting what you're doing here?
So that's probably the biggest question that we have to ask ourselves. As an investor, it's become an incredibly important question for us to ask and to figure out where this is moving towards. And really, you can't have all the answers right now. It's playing itself out. I think the first thing we have to take a step back. Multilateralism has been a great thing for Asia. It has really uplifted Asia in the last 20-odd years, created significant growth, jobs, especially in sectors which have great prospects, created opportunities, uplifted communities. And it really has been a good thing in terms of bringing hundreds of millions of people, or even 1 billion people, from poverty into a middle class existence. And that's been great. And so the US-China relationship is the biggest elephant in the room with respect to that. And it really has an issue in relation to this multilateral trading system and the benefits that it can continue to convey on countries in Asia. If you look at ASEAN, for example, we have so much going for us in terms of our demographics. We have 650 million people, roughly 50% are between the age of 20 and 55. There's a huge internet economy boom that is being seen, potentially $240 billion US by 2025. All that's looking well. And then you have this whole issue of US-China, and it does give cause for pause to see what it means in terms of those growth prospects that we were seeing just on the horizon a year ago. And how does this bifurcation issue really play itself out? These are the questions. So it can happen there are 4 areas which I think we have to think about because they have long-term effects. First of all, supply chains. Second of all, technology. Third, I would say settlement systems. And fourth, financial markets. In terms of supply chains, supply chains are always reconfigured. It goes to where either costs are best situated, or nowadays more towards end markets. And where so it's going to get closer and closer to end markets, especially with robotics, automation, 3D printing, and that's a natural thing. But with bifurcation, I think you are going to see an additional dimension to that issue, and that's going to be a cost-related issue as well, and will have an impact on growth in Asia and in particular in ASEAN. But the second thing about it is that it could create more intra-Asia trading, much more than we've seen before. Today, intra-Asia trading is about 60% of all goods traded within from Asia. And I think that is something we have to pay close attention to, because if the RCEP becomes a reality, and that is, of course, the 10 ASEAN countries plus 6 others, India, China, Australia, New Zealand, Korea, and Japan, then you're addressing the needs of 50% of global population and 30% of global GDP. And then if you add on to that projects which are in the BRI initiative, Belt and Road Initiative, and if those come to fruition, then you're going to see even more potential intra-Asia trading and global supply chains being reconfigured. And so that's one element. But the second element is actually on technology. I don't want to talk about settlement systems or financial markets. I think John is probably better suited for that. But on technology, this is the biggest concern that we have. Because if you see a bifurcated world in the context of technology, and I think you can't negate that possibility because China understands its vulnerabilities in relation to the technology question, especially in the semiconductor industry and chips and so on, then you have a real conundrum. Because if you then look at the consequences of that issue, then we have a US-influenced indigenous technology system and a China-influenced indigenous technology system vying for this global international marketplace. What does that mean for all of us? And that's a big question, I think.
Yeah, well, I think that absolutely is a good question. And I think you've really summarized the whole issue of bifurcation for many of us. But then I was very interested in the latter part of your comments. Does this bifurcation in the world, would it lead naturally more regional blocks? Or is it time for us to really think about doing something about this bifurcation and really start thinking about some sort of rebuilding of the multilateral process? Where do you come out on that, Dylan?
So, it's a tough question, especially for all of us in ASEAN, because China is our biggest trading partner. China accounts for about $440 billion of trade with ASEAN. In fact, it's so interconnected that there's so much export similarity between China's end markets and goods and ASEAN end markets and goods. And so if you look at it, ASEAN and China are really, sort of very closely connected. And if you're thinking about bifurcation, then if China is the big market that we have to deal with, and it would obviously be the case, then if there's a China indigenous system that's going to come about, I don't think we can ignore that. But on the other hand, we trade with the rest of the world. ASEAN has a huge trade with Europe, for example. That's an international marketplace. So I would say that what happens is you might have to have two systems, right? And I don't know how that works, by the way. All I know is it's more costly than it is today.
Well, is there a role for bridging between the two bifurcated entities? I mean, what about that idea? Could ASEAN play that role? And then other places, I mean, let's not forget the other big elephant, Europe. I mean, so why do we accept that this will be just bifurcated and either you join that one or that one?
Well, I don't think we want to accept it as bifurcated. I think we would rather avoid that it becomes a bifurcated system.
Yes.
But I don't think that we can avoid thinking about it from a strategic perspective. We have to have a strategic orientation while we deal with things on a day-to-day basis in a tactical way, right? Can ASEAN play that role? I mean, quite possibly, because ASEAN has very strong relationships with the US, very strong relations with the US, and it has strong relations with China. It could play that role. But really, it is between the US and China. They are the two big entities, two big countries out there. They constitute almost 40% of global GDP. I don't think ASEAN can be an interlocutor. That will be a big problematic issue for ASEAN. But can it be a bridge? Possibly. Yeah.
Maybe profit from dealing with both.
Yeah.
That's probably a good way of thinking about it as well. I think it's time for us to turn to you, Professor Menon, and really think this more to a geopolitical basis. Now every day I pick up the newspaper and it's US, China, US, China. How about the rest of the world? How about, I keep asking, where is the European voice in the midst of all this? And in Asia, where is the Indian voice? And how does India look at this? And what sort of attitude would one take from an Indian standpoint? And how are you going to do this? Are you going to join one side or the other, or start speaking really for your own interests?
Well, it seems to me that what you described as decoupling or bifurcation on the trade economic side is also happening geopolitically. There's a real risk that we're going to have two separate but overlapping geopolitical orders. Mm-hmm. And of course, both those who run those orders, whether it's China or the US, will say, join us, or if you're not with us, you're against us. But that's not what anybody else wants geopolitically. the consequence of having two geopolitical orders is going to be that the conditions that made this fantastic growth in Asia possible over the last 3 decades, that those conditions are going to be affected. Basically, absent global public goods, things like freedom of navigation, dispute resolution, crisis management when flashpoints do occur. And unfortunately, it goes along with domestic politics in most of these countries, in fact, all the great powers, where new authoritarians have come to power, base their legitimacy on ultranationalism and therefore have much less room to give and take, to do the normal bargaining that you do in diplomacy. So what do you do in this situation? For a power like India, China's our biggest trading partner in goods. If you add services, the US is our biggest trading partner. We can't do without either. I mean, there's no way that we are going to choose between the two willingly, unless it's absolutely essential. We would do whatever we can to try and ameliorate or mitigate the consequences of a divided world, of a bifurcated, decoupled world. And the way forward for me is issue-based coalitions of the willing. If you're dealing with, say, freedom of navigation, that's one set of people you'd get around the table who have the capacity, the navies, to do what they need to do. If you're dealing, say, with cyberspace, which is being weaponized, militarized, you'd have another set of people who have the capabilities to actually, and these would be different coalitions. So you can't expect the world order to start dealing with these issues anymore. So you do sort of multilateralism light, as it were, and build these coalitions and deal with the consequences and try and minimize them so that we can keep growing, we can keep developing the way we have been so far. Is it possible? Yes, it's going to be hard work. It's going to be much harder, especially in the kind of economic climate that you're offering, this deflationary situation where it's going to get harder and harder. But I think it has to be done because the alternative is terrible. The alternative is that every little crisis somewhere or the other actually leads to direct great power conflict. And that's something you need to avoid. That's the worst case scenario, actually, from our point of view. I know, national security advisors make their living with worst case scenarios. That's what gives us our jobs. But frankly, that's what we have to avoid.
Yeah.
It is interesting to observe that while US and China are having this conflict, and it obviously has impact on both economies, actually it's had more impact on other economies.
Yeah.
When you look at the impact that it's had on Europe, as Europe is kind of caught in the middle, it's had a bigger impact, I would argue, on European growth and opportunity than it has in the US or China.
I can't agree with you more, John. So if you were standing from a European perspective, how would you react?
Well, it'd be easy to argue.
That's what I've been always wondering.
It'd be easy to argue for some coordinated fiscal response sitting where I sit, but I think that's much harder to come by in a European Union that we have today. But I think, the European economies to me do seem very sluggish. If we look at our business and our flows, that is the weaker spot in the developed world for sure. And there's only so much more the ECB can do. If anything, I would say the ECB's response was maybe a tad hawkish relative to what they've been, adding tiering to help the banks, which was a smart thing to do, but it's not, they're not, it doesn't seem to me the trajectory is to deepen, QE as much as the markets may expect. So I do think the monetary policy response is kind of running its course. It's debatable whether negative rates are really working, and there hasn't been a measured fiscal response. So to me, fiscal response in some fashion would be the next move, but I think that's hard to do politically.
Yeah, well, I think given the dominance of the US dollar globally, I think it's very hard for Europe to pursue a truly independent policy. But coming back to Professor Menon's point, what you're really now suggesting is the issue of addressing, shall we say, cross-block issues on a sectoral basis, on an issue-by-issue basis, not necessarily an all-encompassing multilateral system, but a very pragmatic one that you use the word coalition of the willing. Is that the way forward, you think? And then maybe from there, we can then knit back together another form of new multilateralism.
you know, it depends on what you think the problem is. I don't think we're in another Cold War, because the fact is both the US and Chinese economies are joined at the hip. I mean, so there's a limit to the kind of decoupling. In fact, the fact that we can even talk about a possible trade deal itself suggests that this is not pure decoupling. It's not old Cold War anymore. So I think we need to be much more pragmatic and flexible in the way we deal with it. And I think there's enough there still to work on. And for ASEAN, for countries like India, I'm not saying we're bridging. No, that's too much. That's too big a role. But we need to deal with the consequences while they sort themselves out and while domestic politics in the great powers evolves to the point where it's possible to make progress.
Yeah. Well, if we can delve a little deeper into the trade issue, Dylan, you mentioned the whole RCEP, and I think India has been one of the major factors, I think, in my mind, the future development of RCEP. You think that actually could be developed into a really large regional force, and that could actually bind a lot of the ASEAN plus the India and China together, and then have another kind of major move forward?
So generally, trading partnerships, multilateral trading partnerships have worked quite well within Asia. So if you see whether you look at CTPP or whether you look at RCEP, these economic partnership arrangements go beyond trading. They really talk about getting more interconnectivity on a number of different levels, right? Trading is one level, but you really are looking to see how we can uplift communities in each other's countries and do things which could have, like Shankar was saying, a commonality of interest. Yeah. Mm-hmm. And I do think that having these sort of partnerships can actually help in a different respect. If you think about the needs of Asia, just talk about needs of Asia, there's still significant numbers of people in Asia who are below the poverty line by any international standards. And so there's still a need to find solutions for that. Now, if you're thinking about industrialization and the benefits of industrialization to these countries, you have to think about the consequences on sustainability and, for example, climate change.
Right.
And if you think about that, you have to also look at the same time at education, workforce development, workforce training. Now, regional blocks like that could be expanded to go beyond trading into looking at opportunities to work together to find such solutions. You take, for example, the requirement for energy in Asia. By some measures, 75% of world coal demand, even right through to 2050, will come from Asia. 75%. Now, that means that coal plants will be in existence right through to the end of this century, almost to the end of this century. Mm-hmm. Now, that doesn't help if you're trying to reduce our carbon footprint and keep our temperatures from rising more than 1.5 degrees, right? It doesn't work. But the reality is that most of these countries can't afford green solutions. It just doesn't work. Coal is the cheapest fuel source that they can get. And they need that for industrialization, for uplifting the communities. Now, this is where multilateralism or the coalition, the willing, or whatever you want to call it, should come together. And whether these blocks can accelerate that, that's an important question for us to ask as well. Because there needs to be solutions where you bring governments, multilateral agencies, equity providers, those who are looking for lower return in addition for purpose, together to find these solutions. Then you have a long-term sustainable solution for everyone. And the same thing comes with education and workforce training. Because if you really want countries to prosper and you want populations to get up, then education is critical. And education is very critical in the context of Asia. Mm-hmm. And it leads to also workforce training. You have to think about the way in which jobs have to be designed, redesigned, and skills and reskilling, upskilling thought about in a very systematic way. And these are things which economic partnership arrangements should bring about, and not just trading.
Yeah. And then finally, turning to you, John, how much of a role can the financial markets play in terms of kind of bridging and joining together these, especially, I'm thinking of the financial markets in Asia. Do you think that in Asia we have the depth and the liquidity to actually play a major role and be an interlocutor? interlocutor.
Well, one of the biggest issues in China to us is the lack of a really developed capital market.
Yes.
I do think the capital markets in the other economies in Asia, for the size of their economies, are better developed, and so there is more progress. But if you just take China as the big economy in the region, the lack of a fulsome capital market, in our mind, is a weakness in the system. You know, the country's still too dependent on bank lending, still too dependent on government debt, and not dependent enough on a capital market, foreign capital. And so we would be promoting the notion of the opening up of more of a capital market in China that would allow foreign capital to come in. And you know, inclusion in global indices would start to really attract that capital. You know, you can already see the flows with the MSCI inclusion of A shares at this point. Now at about 2 or 2.5% of the emerging market footprint, probably going to go to 4 or 5% soon, later this fall. But if you could actually take it to 100%, meaning 100% of A shares were included in the emerging market indices in MSCI, that's $400 billion of flow.
Okay.
So that's a lot of flow that can come in, a lot of that foreign capital, obviously, that circulates in the economy and helps promote growth. And I think the same basic premise holds for the other economies. But China's obviously a large, the large kahuna in the region.
This is actually a perfect segue. Turning to the questions from the audience. As I open this, the first thing I see is, in this bifurcated world, what is the option to replace the supremacy of the US dollar? That's the first question of this.
With a stable,
Yeah,
with a stable coin.
Okay. Is that an alternative?
It's hard. It's kind of hard for me to imagine that we're anywhere near the replacement of the U.S. dollar as the reserve currency. I do think the issue of digital currency is a real issue, and so rather than thinking that there's another existing currency that may replace the dollar, I think one real issue that regulators and the world is going to have to get its head around is this notion of digital currency to facilitate international payments in particular and reduce the friction and the cost of that internationalization of commerce. And that, I think, is a bigger issue. But I still think the dollar will be the reserve currency for quite some time.
And what is your thinking about the future of the renminbi and the internationalization of the renminbi? If China does open up and if trade does become more and more active to and from China, won't the renminbi be a natural ascendancy in terms of the overall use in the world? And won't that provide a little bit more of a balance?
I would agree. I think the internationalization of the renminbi is an important development. It would go part and parcel with the development of a broader capital market and a more FDI and more international flows. So we would support that and we would agree with that.
Mm-hmm. Okay. The next question actually is addressed to you, Professor Menon. Really, it's pushing you a little bit on India's role. I know that India is really trying to play a non-aligned basis between the U.S. and China, and really perhaps in the middle. You said that India will avoid choosing. So what happens if India is pushed to choose? How would you kind of react to that question?
India is going to be India no matter what. We've been pushed before. We've been pushed at times when we were much weaker, much more underdeveloped, and we still didn't choose. So partly it's because of, it's very hard to think of another country with the same interests as India. And there are very few countries that you can actually compare India with. So it has to therefore follow its own interests and follow, a path that looks maybe neutral, non-aligned, whatever, strategic autonomy. There's various words we use for the same phenomenon. So I don't think it's going to be pushed to choose, but I do think that the sort of Indian experiment, which is of trying to grow while staying a democracy, I think that's worth looking at and seeing how other parts of the world can also start applying it. The other thing I want to make is our experience actually shows that there's a huge opportunity for social entrepreneurship. A lot of the trouble we see today in geopolitics is driven by the politics of emotion, by the rise of new authoritarians, by by essentially a backlash against globalization and the increasing inequality in societies. And that's somewhere where actually, if we address it the way Dylan was saying just now, if we start dealing with that, and that's somewhere where there is room for social entrepreneurship. And those are the kinds of things that I think India can actually bring to the table, where there are, you know, it's probably the world's biggest laboratory for this kind of experiment. Yeah. And I think that's the kinds of things where India will, and every one of the issues I mentioned, I think India has capabilities to bring to the table. So neutrality or non-alignment doesn't mean non-engagement. In fact, it's the opposite. It means more engagement, but much more careful and calibrated engagement in every one of those coalitions of the willing.
You know, this really leads to a very interesting exploration in my mind. You know, for the last 70 years, I think we've seen, as I think Chairman Ho Kwon Ping put it, Pax Americana. And there was sort of one leader that actually did a lot of good for the world, created the multilateral system under its guidance. And what we're really seeing today, of course, is the emergence of a potential challenger. But that actually makes the basic assumption that we're in a unipolar world. And we seem to be now sort of developing to a bipolar world, US-China, US-China. But why? Why should it be, first of all, why should we stay a unipolar world, which will naturally lead to a zero-sum game? And then why morph only to a bipolar world? Why not have countries like India, Japan in the region, ASEAN, Europe globally, actually really speak for itself? And really the evolution perhaps is to a multipolar world.
I believe actually that Asia is reverting to a historical norm, which is of separate multiverses, which trade and deal with each other, but basically go their own political ways and take care of their own security. And in a sense, that's what the world is heading for. It's not necessarily, by the way, historically, bipolar systems have been very unstable. Mm-hmm. And so have unipolar systems. They've never lasted as long as the last one did, which is remarkable, the whole American century. But this sort of our historical norm of multiverses, all of whom actually trade, exchange ideas, I mean, you know, China historically has been the world's greatest exporter of knowledge, for instance. That kind of world, I think, is probably what we are heading for in the long run. But getting there is going to be painful.
Yeah, okay. Well, I think it's probably time, given the remaining time that we have, it's time for us to open up the floor to questions from the floor. Can we, or you can actually send it to me via the machine. Please feel free to send it here and I can actually address some questions to the panel. So would anybody like to ask a question? Okay, any volunteers? We have to get the chairman to ask the first question then. Sorry? Okay. You know, maybe then, let me ask a very practical question. Given all the discussions that we have in terms of the overall scenario, what does this really mean for individual businesses? How do we navigate this bifurcation? You know, that especially that you mentioned, Dylan. You know, this idea of two completely different systems, you know, at different levels, and even at very practical, you know, sort of connectivity levels in terms of e-commerce and so on. So what do you think is the reaction, and how would investors think about actually aligning their thinking and the risk adjustments and so on in this sort of environment?
I think a natural tendency would be to not contemplate this world, really, because it's actually much more complex than we can think about, because it brings into account geopolitical considerations, which, as I said, are still evolving. And you know, the question, you see, there is a danger of doing too much now when it may not turn out to be the worst case scenario that you think it's going to be. But you have to have a strategic orientation while you're dealing with things day by day in a tactical manner. It's like playing the long game, but still paying attention to your short game. Right? I'm not a golfer, by the way, but I gave it up because I couldn't putt to save my life.
Yeah.
But I think that you have to have that balance. You know, every CEO, every person who runs a business, every board has to think about the strategic roadmap for your company or your organization. As an investor, you know, I think Chow Kiat mentioned at the GIC Insights, you really are dealing with a world today where there's so many issues which have sort of come together at the same time. And really, you know, for us, you know, keeping dry powder and keeping cash as an investor makes a lot of sense until we have that discussion with companies as to what they're thinking about, so that we then know how to make the long-term investments that we are supposed to be doing. I mean, we as investors can't invest for just the short term. That's not in our orientation. So it's really a time for people to reflect and think clearly about where these issues are leading to, and look at the different alternatives and try to figure out how you want to approach it. I don't think there's one particular road that we can travel on, because it's an evolving situation. As was mentioned, the US and China are really interconnected. Now, what does that mean in a bifurcated world? Just between the two of them. It's not just about other countries or caught in between.
You know, I think this put a lot more premium on asset allocation and really thinking through on a geopolitical basis where the shifting winds are. And for any individual company that you might pick, fortunes could change very, very quickly.
John might have a better.
Yeah,
Well,
exactly. John, what do you
I
think?
would say, I mean, I
Yeah.
said in the beginning, we're seeing asset allocation changes in the investing community already. I mean, there has been disinvestment in China from global asset allocators. Not every one of them, and not a complete retreat, but there's definitely been disinvestment. And I'd say that there's been investment in the U.S., interestingly, in terms of flows. Maybe that's a bit of a safety mechanism. Maybe people want to own dollars. We can all have our, you know, theories
Yes.
on that. But I think people are husbanding capital. Dylan mentioned it. Raising and holding more liquidity. I think forming more ventures and relationships in more places. So if you had a supply chain or you had an allocation of your resources in some way, shape, or form, now you've got to go start forging new relationships, building new ventures, putting some stakes in the ground,
Right.
taking a longer-term view on the optionality that you might need to play for down the road. That's what we see our clients starting to think about. But I think it's a measured response at this point. I agree with Dilhan's comment. I think most people prefer not to think about that world. And those that are thinking about that world are doing very small, measured baby steps. But most of it revolves around husbanding liquidity and broadening your aperture in terms of who you're spending your time with and building new relationships and creating new ventures.
Very, very sound words of advice in this sort of environment. So I think I've been asked to wrap up, but before we do that, Professor Menon, last word from you in terms of, you know, what advice do you have for businesses and perhaps even governments in this environment what are some of the specific things and initiatives you think that we could be thinking about and proposing?
If you saw how I manage my finances, you wouldn't ask me. No, but honestly, no, I think, frankly,
We can help you with that.
No, the security business, I think, is, frankly, any business that helps you to manage risk is the place to go. If you need a safe haven, because we're in for stormy waters for a while to go. Yeah. I don't know if that's any help, but.
Yeah, and for potential economies or governments in the region?
Well, you know, governments, as I said, governments have been both hedging, balancing, and bandwagoning all at the same time. Theory says it's not possible, but they do. And I think India, ASEAN, today are trying to do all three.
Mm-hmm.
Whether it works, I don't know. Because it's not only what India and ASEAN want, as we've just said, it's what the big boys in the room want, what China and the US do. And let's see where that's going.
Well, it basically seems to mean that we're actually embarking into a brave new world and a new journey. You know, this is obviously, you might say, some people may say the world is in a bit of a crisis mode. but I'm reminded of the Chinese characters for crisis. It says danger and opportunity, and the combination is crisis. So, while we can actually look at the bifurcation issues and some of the developments as potentially really not so easy to handle challenges, I think there is also an opportunity for us now to think about some of the opportunities. And frankly, in my mind, constantly coming back to the idea of, don't we really need to have a new think about how we're going to bind the world together with a new form of a multilateral system, multilateral thinking. I'm not ready to give up and say the world will fragment into bilaterals or even regionals. So with that, ladies and gentlemen, I'd like to, on your behalf, thank our very distinguished panel. Thank you very much.
Thank you very much, panelists.